Hello, 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 everybody. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. How's everyone doing this morning? Happy Fed Wednesday. Happy, happy, happy. Are we all ready for the Fed this afternoon? Good morning, Kalani. I'd take those Head and Shoulders are very, very sloppy. We can glance at them, but they're actually not well formed. And by the way, I wouldn't get chopped up. Don't force trading before the Fed meeting. If you don't have to do anything, you're better to wait till after it, unless there's a fantastic setup. But, it shrugged off durable goods this morning. The market's all going to go off of this Fed meeting stuff, and it's actually looking like the market still wants to buy everything. Buy good news, buy bad news, buy, because I think the trend, just at least from a psychological point, is the lows are in. Let's just buy, which I actually love, because that means the next rollover will be wonderful. But it's just interesting information. Hello, George. Hello, Jacob. Good morning, Patrick. Good morning, Davey. Good morning. Retail inventories are up. That's yes, and that's not actually a bullish sign. But the durable goods it's based off where they're going. Durable goods month over month. Thank you for putting that in there, Davey. Forecast point -5, month over month 1.9. GM. Good morning, Sashi. So you already put it in there. Let me just get out of the way with the stuff we have to do. Please subscribe if you haven't already. Ring that bell and hit the like button. We're shooting for that 5K subscribers coming up shortly. If you're longer term here, please come back, leave comments like you've been doing, and hit that like button. All right, out of the way. So, Kathy, but I know I saw she sold coin. I did not see she bought shop. Oh boy. She just can't find anything at a good value, can she? She's got to chase all this crap. Good morning, Anissa. Hope you have had a wonderful day so far. So, durable good orders. Yeah, that was a strong beat. X Transports, though, was a slight beat, but down from revised earlier. Retail inventories are up, as was mentioned. Durable good orders, it was really, defense had a major play in that today. But wholesale inventories are up, which is never a good sign for long-term retail. I mean, at certain points, if you're at the beginning of a cycle, it's good because you're building inventories. But if you're into the cycle, it's not good. The other stuff, pending home sales, but that's going to get shrugged off. Crude, if you're trading crude, remember the 9:30 central numbers. But everything's going to key off of the interest rates, and especially the Fed press conference at 1 p.m. Central and 1:30 p.m. Central. And remember, most of the time, the first move is the fake out move. This morning, again, you had Microsoft say there's still going to be strong sales based off cloud stuff in their conference after earnings. Again, it was just buy up everything. People at Google, I did not think was that strong, but people are like, Google, see how strong resilient sales are. Let's just go buy it. Big move up in there. And now Amazon, even the bounce. It's buy everything again ahead of the Fed meeting. Fed meeting just under 75% for that 75 basis points. So very indecisive even this morning going into the Fed meeting. I'd have to go with the 75 basis points because I don't think they'll shock the market with a 1. And everything's going to be based off of guidance. But people think they're going to go dovish. People think they're going to go dovish, which if they did, you'll get a rip your face off rally. But I think people want to buy anyways. So unless they really become hawkish during that press conference, it's leaning towards the buy side breakout. I'll trade the technicals because I have to trade the technicals. Can't trade what I think, but we're also in negative gamma territory. So even for a short-term rally, you could have some extra juice to the upside. By the way, after the close, before the open, we did have Shopify out, which is trading at its lows. We did have Spotify. When I checked that was a gap up. By the way, after is Meta or Facebook. I still call it Facebook, and Qualcomm, but that's going to be minor compared to the Fed meeting. And then tomorrow we still have Apple and Amazon, which is really, really big. And then Friday we got some gas earnings. All right. So Let's see. Good morning, Options 22. Good morning, Eric. You are welcome, Anissa. Good morning, Christoph. Yeah, exciting day. Exciting rest of the week, sort of. This just kicks it off, really. WTI jumps to 96 mark as Saudi sets the hike. Oil price to record highs. I mean, oil's still here on the futures. It's just a mixed bag. Again, it's the breakout or the breakdown pattern at this point. We'll take a look at that, but again, everything's based off this Fed meeting. We had that little 1 hour double bottom last night that once the market reopened, went straight to target. I just wanted to leave that on there. That was once it reopened, I'm like, wow, here we go. Straight to target. This is not a well-formed head and shoulders. Don't bother trading it. So my minor levels, and I'm pretty much sitting on hands until the Fed meeting. I'm not going to get chopped up, not going to try to play short-term support resistance. It's just not worth sometimes trading. My first warning sign to the upside breakout is 39.77. I updated that level, and then the major breakout area is 31.91 roughly. That's where I'm going. If we do that, playing for the highs, then 40.29. And even with cycles now, we've had a very minor pullback, and cycles get into a bottoming area on the daily. So any strong move today will push it back up. So you see a 40.29 area, which would be the top of the channel, and a break above that if we get a very strong move. Remember, we're into a clear path still. So if you get a move up, and based off the buying pressure we're still seeing, unless the Fed comes out really hawkish, there could be another upside breakout with still weekly cycles at the top before the next big rollover play. Do not discount that. So that 40.29, and then the next level is 40.42, and the next major level is 40.59. So those are all the upside targets. Again, downside, my breakdown level going into the Fed meeting is still right around this 39.30 to about 39.27, right in here. And I'll just keep on these targets from before, 39.05 to 3900, and then 38.80. Then below that, into a clear path move on the 4 hour. So the end of the clear path moves is about 39.38. And if you really tanked, and that would easily take it back below the rotation zone and back to this pretty key area, but below there, your next major stopping is about 39.74. Apple doesn't provide a lot of guidance, Coco. Apple keeps things traditionally very close to the vest. Their biggest guidance so far was, their stuff on hiring that they released a while ago. Good morning, Wavy. Well, you're hoping for a 100 basis point hike? Okay, there you go. I've been watching your tech analysis videos. What indicator do you use for cycles up or down? It's the stochastic RSI. Stochastic RSI, Anise. I think it was June 21st where I go over the parameters in that. Yeah, I would agree with that you can get short-term emotions going to overrule the long-term. That's why I'm watching for the breakout or breakdown today. I'll still use the levels. The levels hold up. Things like cycles and overbought and oversold can easily be overruled. But levels are still, yes, you can blow through levels, but the larger term levels are still key. The larger term based off the daily and the weekly and some larger term harmonics are still key. Don't get caught off guard that technicals all don't matter, because price action levels still do matter. Now, if you're trying to play stuff off the 5 or 15-minute chart, those are very minor levels, and emotion and momentum with a Fed move can easily blow through those levels. But daily and weekly levels are very important still. NASDAQ 3-day pullback, rotation back up. My major breakdown area is roughly 12,080. We break down below that. So this is why we've already got that pullback to the daily rotation zone. We've held key support after a retest. My breakdown level is roughly about that 1280, 1295. Then I'm just really playing for, if we do break down, about 11,888 to 11,9. The end of the advanced clear path is right down here. Right down there, 11,916. So that's my next support area. If we did blow through that to the downside, next key area, I'm just going off these channel bottoms with this other key low about 11,726. I'll put extra lines on here for the time being. To the upside, my breakout play is roughly about 12,383. Then minor is 12.5 to 12.527. Then major, if we just blow through there, I'm just going, if we get a rip your face off with this really nice corrective pattern, let me just pull off this line because we already know it's hit the first, second target. If we really do rip your face off, 12,787 to about 12,800. So that's what I'm watching for there. I'm actually leaning to the side to the upside breakout just from a gut feeling, but I will trade what's unfolding with the markets after the retest of this support. Yeah, volume is still terrible. You'll see, and the breadth is still terrible. That's why the moves can be especially amplified, both upside and downside. There is very little depth in this market. Good morning, Chris. That's not gonna. You're gonna see. That's not gonna matter, Coco. Nasdaq little 4-hour doji into a Fed meeting. This is where. That's why I don't get chopped up this morning trying to do stuff, because there's going to be some movement. But unless some headline rolls across that's shocking in the world, there shouldn't be much momentum besides some back and forth range bound trading this morning. And again, everything's going to matter off those breakouts or breakdowns. Dow, nice little pullback, even way ahead of key support. Way ahead of key support, catching on the 1-hour rotation zone and rotating up. My levels, the upside in the Dow, let me just get through this, 39,100. Then major is about 32,350. And above that, just for the sake of completeness, 32,600. Breakdown minor level is 31,650. Next key support is about 31,500. And then we fall through there. If we had a big sell-off, it's 31,050. Russell, again, pull back to daily rotation zone. Didn't even get back to support. This is favoring buy-side breakouts. 1822. Then let me adjust that. Let me get to the bigger levels now. 1822. Then I'd just target this 1847 to 1848. And then the next is 1866 and 1884. Breakdown area, my breakdown area is this 1800. Then it's back to 1780 to about 1774. And then we break through that. I'm going back to 1745. DAX, pretty orderly pullback so far. We still have the probabilities of that double in play. If we do break below 13,000, I'm just giving it 13,000, 12,900, and then major is 12,785 area. To the upside still on a short-term break, 12.3 to about 13.3. 13.3 to 13.330. And then this 13.432, then 13.592. Crude, it's again, I'll watch a little earlier if we start breaking above about 96.70, and that would be a play to yesterday's highs, 98.87. My breakdown area is still here, this 94. We break down to 94, watching these two bottoms, not a double bottom of 93. Then we break down to 93. This is a play back to 90.50, but everything short term on that. Also, natty gas, we're getting that bigger pullback now. A one-day pullback after that pretty toppy bar. Still very oversold on the daily, so watching for this key pullback to the daily rotation zone. Gold, nothing much here, but if you do get the upside break above about 1740, There is a very aggressive play to about 1755. Silver, there's a breakout play roughly above about 19 bucks. Copper, not touching anything with that right now. Notes, we still have a potential little double top. And this Head and Shoulders has been confirmed. I'm still watching for a trigger pattern, but 119.15.50 is the breakdown zone into 119.02, 118.27, 118.20 roughly. The breakout area, now we have the major stuff, but if we really get a move on above 120.20, here's where I will also use some more aggressive. This is a great area to reverse harmonics besides the Head and Shoulders. These are for the shorter term levels. For shorter term plays, target would be 121, 121.26, 122.21, which can also be used for more aggressive stop raises should it break out to the upside with the Fed move. Dollar index still sitting here. Again, the breakout play would be above 107.20 at this point. Nothing's changed really. 107.57, 107.55, and then 107.95. 95, yep. Breakdown is 106. Other than that, it's stuck in this range. And if it did get the breakdown, the target's 105.35. Good morning, Lauren. So, Andrea, good morning. So, as a 75 basis rate point for positive for the market, if I see the markets breaking up as well, it's not, again, you're trying to apply logic to these markets. And these markets bear markets are never logical. Okay, because people repeatedly try to call bottoms until they give up, and then you get the major grind slower. So 75 is baked in. 75 is baked in. It's like, okay, that's done. That's why if it's a 75 hike, all right, and there's no way it's going to be a 50 basis point hike, else the market would just scream and the Fed would pretty much lose all credibility. So 75 is the base case. One would slightly shock the market, slightly. All right, they'd be, the Fed's still being more aggressive. 75 is just like, okay, business as usual. Let's see what they have to say. And then if there's a hint of dovishness or a hint of we're completely data dependent, we're going to completely go into the September meeting, remember, there is no August meeting. So we have a pretty long period. So a lot of data is going to come out between the today and the September rate hike. All right, and if they say they're data dependent, there is a lot of data, and the market could take that as, hey, there's going to be a lot of data that comes out. Remember, the next rate hike is not till the 21st of September. That's 3 weeks into September. That's like, you got that's roughly 8 weeks from now. So you got 2 months, nearly 2 months worth of data to come out. So that's what I'm saying. That's why it's not necessarily the rate hike isn't necessarily positive for the market, but people are going to take that if they come out with that as okay, then they'll be forced to either cut back severely on the rate hikes or even, people are talking about a pause in September, which I don't see even if inflation drops to the 7% range. If they were to pause in September, yeah, the market will skyrocket, but you'll have embedded inflation, and long term, it's going to be a disaster. JP Morgan downgrades Eurozone over economic forecasts, expects mild recessions. Even recessions are getting somewhat shrugged off it now. The Fed can't stop this inflation. Powell's too coward to say the truth. I agree they should just say, hey, we're going into a recession, blah, 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 but there's no political gain to do that. You're welcome, Andrea. So let's check in at the VIX. The VIX pretty neutral. Breakout, I'm watching yesterday's. If for bearish mode, I'm watching yesterday's key close. So we start getting above about, let's give you the exact close. To tip me into bearish mode with downside momentum, I need to get a move above about 24.70. We start breaking back below 2380, then and we start breaking the upside, then I'm going with bullish mode. Let me get to the things like the Qs for everybody. Again, Qs, we've had this nice orderly pullback. First and second targets hit. Nice bounce up this morning. So my targets are again 299. Minor target this 330 area. And then let's just do this also. Let's do this also. So you want intraday targets 301.09, so just in front of there, but your major target is 303 area. Okay? You get above, we start getting momentum above 303, then it's a really nice continuation play, and then the targets would be 306.60. You can see here pulled back on a nice 3-day pullback to the prior breakout zone. All right. So your minor support level is 292.50. If for the breakdown play, I'm watching 291.79. And then my next support is 289.46. So 289.50. And then major support would be this gap fill, 286.76. So those are all your upside and downside. Although also, let me see one thing. You start getting the breakout play above today's high, it could be an aggressive percent B buy pattern. I mean, above this 4-hour high. So if you're looking to play something more aggressively, and that could be played on a break above there in the Fed meeting and then carried over with a close above that. That high is 295.65. But I would not, if that broke above there and did not close above there on a 4-hour bar, would not carry it. Because it would not be an official trigger then. Oh, I already did. What am I doing? Spiders. Again, nice 3-bar pullback. I had this sloppy double. The sloppy head and shoulder targets on there. So minor is about, I'll just keep those levels up. They're pretty decent. About 388 and then 386. My major support on a breakdown, though, is 381.70. Okay, I doubt we trigger more than that, but the next key level below that is the gap fill 378.10 area. To the upside, really nice orderly pullback. Same thing, aggressive buy above 392.34 on a closing basis on 4-hour, but that could be front run on a breakout play with the Fed thing, and then if it does close above there, carried over. My targets, here's the minor and major ones. Minor would be this 395. Major is 396, about 40. And then you get a close back above there, back to 399 roughly to 400. And then on a continued, not for today, but a continued breakout plays, in case you don't tune in every day, we have the significant cluster of 403.67 and 407.46. Tesla's going to follow the market. It's sitting at key support. A breakdown. Next out level 755 and then 743. If we get a momentum below that, I'm then playing for over the next few days 686. To the upside, your minor breakout area is back above roughly 799.50. You still do have a minor gap fill there, but if this rotates up, then I'm going to be watching for a return back to next level is about 814, and then you get a close above there, 832 to the recent highs. Where else do we sit? Yeah, inflation will hit 2 digits. It's at you think it will hit 2 digits the upside if they don't keep on a more aggressive pace. Now, if they stay on this, and I agree they should be even more aggressive than this. But if they don't, if if they start easing up too soon, yeah, I think inflation will pull back slightly and then get into rip your face off mode inflation. Yeah, the 2% target's far from reality. I don't see us returning to that for if we have a major recession, we could return to that possibly end of 2023. SVA confirmed U.S. criminal probe down 30%. Well, yeah, if you're under criminal probe, that's going to hit your stock. Good morning, Ramsafal. Let's just check in on crypto. Crypto's gonna still there's pressure just with all the investigations, but if we do get some kind of rally and break above on the Nasdaq, remember it's highly correlated with the Nasdaq. It's losing a bit of correlation because of all the negative stuff, and you're going to get more and more criminal probes. We do have daily cycles at the bottom, so there is a short-term play above about 21,660. And my next target would be about 23,120, and then the top of the channel line at this point. If we do break below about 2750, then my target is the 20,150, and then the next breakdown play lower, because that would be very bearish, but would not be surprised if the Nasdaq breaks the upside to see another pop higher. All right. It's open. I went into the open again. Let's just check the NASDAQ and the S&P. And again, take these moves into going into the Fed with a grain of salt. There'll be some minor break moves and back and forth choppy. But unless you get some back-to-back momentum bars, it's going to favor extreme range-bound trading and minor stop hunting. So if you don't need to do anything, don't waste money trying to play these silly short-term moves. With that, you're welcome, Sterling. You are welcome, Anissa. And I will be back. There's no reason unless something major happens for me to come on at lunch. So I will be back for a daily recap. If I see anything, I'll try to post it in Discord with the Fed meeting if I see any major plays other than the momentum ones. With that, I'll talk to everyone later. Bye for now. You're welcome, Andrea. Have a wonderful trading day. Don't get chopped pre-Fed.